Hey everyone, Couch Investor back on our earnings video for today. It's the third video of this session. So we already covered PayPal, Airbnb. Now let's go over Roku. At the time of making this video, the stock is up 16%. Now remember, last quarter, the stock was up 31% and still the stock went down between quarter 2 and quarter 3. So yes, the stock might pop, but hey, let's see if this one holds. Now, granted, the results much better than expected, so let's jump right into this. So they delivered a strong quarter. Active account net adds accelerated quarter over quarter, and for the first time, streaming hours surpassed 100 billion on a trailing 12-month basis. The strong top-line growth, in addition to cost reduction and measures we announced in September to further reduce our year-over-year OPEX growth rate, enabled us to deliver positive adjusted EBITDA. We remain committed to achieving positive adjusted EBITDA for the full year 2024, with continued improvements after that. We will balance this commitment with investments to further expand our scale, engagement, and monetization. Of course, more comments about the outlook further on. So let's look at the key metrics here. Active account is up 16% year over year, continues to grow quarter over quarter. Streaming hours is also up quarter over quarter. It's up 22% year over year. ARPU still down 7% year over year, but finally it's up quarter over quarter. Then as for revenue, so total revenue increased 20% to $912 million. So as you can see, we were going down with regards to revenue. Q1 was down, then up, and now another one that is up. And next quarter will be up another time quarter over quarter to $955 million, which will also be up year over year. So what happened here? Platform revenue grew 18% year over year. Devices revenue increased 33% year over year. So we're seeing some acceleration there. As for gross profit, so platform gross profit increased 2% year over year, still not that much. And as for devices, still losing money here. It's down 37% year over year. I mean, losing less money than before. That's the positive thing here. And so overall, total gross profit increased 3%. As for the margins, platform gross margin is down 7.6 percentage points to 48.1%, so that continues to decrease, not great. Devices gross margin a bit better here, 7.5% negative, so that's an improvement of 8.3 percentage points year over year. But overall, total gross margin 40.4%, still decreasing, it's down 6.4 percentage points. And of course, it is worrying when you see total operating expenses being up 43% year over year. But yes, the majority of that increase comes from one, sales and marketing, that's up 47% year over year, and G&A, huge increase here, 48%. But as they've mentioned before, adjusted EBITDA $43.4 million, adjusted EBITDA margin of 4.8%. And then for next quarter, total gross profit $405 million, which is a big increase quarter over quarter. Net income still a loss, $85 million, and adjusted EBITDA of $10 million. So of course the numbers here look much better than what was first feared. Again, it's going to take some time until we are going to see this company back to its fullest potential, shall I say. But then again, it has also to do with the current macroeconomic environment. Ad spending, although they are seeing some improvements when it comes to ad spending, more on that a bit later on. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's talk about market leading scale here. Consumer focus on value drove year-over-year growth in overall TV unit sales in the United States. Roku TV units sales grew significantly higher than the industry, and in Q3, the Roku operating system was once again the number one selling TV OS in the United States. They continued to achieve year-over-year share gains across the full range of TV screen sizes, but particularly in the larger screen segment, often the primary TV in the home, which had the largest increase. Internationally, so in Mexico, the Roku OS was the number one selling TV OS. We continue to expand our TV partnerships with RCA as a new Roku TV partner and new Roku TV models with Philips and Sharp in Mexico. As for engagement, they continue to grow engagement while viewing hours on traditional TV decline. Global streaming hours on the Roku platform grew 22% year over year, while viewing hours on traditional TV in the United States fell 15%, according to Nielsen. On a trailing 12-month basis, they surpassed 100 billion streaming hours for the first time. Then with regards to the Roku channel, Nielsen reported that the Roku channel remains a top 10 TV streaming app and represented nearly 3% of all TV streaming in September, which is comparable to the engagement that Paramount Plus, Peacock, and Max each receive across all streaming distribution platforms. Pretty impressive. Then as for monetization, they say here that in Q3, content distribution activities grew faster than platform revenue, benefiting from increased subscription signups, along with recent price increases from SVOD partners. In Q3, the macro environment continued to pressure the overall US advertising market, with ad spend on traditional linear TV down 12% year over year, and traditional TV ad scatter down 27% year over year, according to SMI. Conversely, we saw continued signs of rebound. In Q3, the year-over-year growth of video advertising on the Roku platform outperformed both the overall ad market and the linear TV ad market in the United States. That's very, very good to know. Here they show us a little example of how they're working with partnerships, in this case with Walmart, ways of advertisement. This is inspired by Patrick Mahomes. You can shop things that, well, he likes apparently. By the way, Patrick Mahomes, if you're not an NFL fan, Kansas Chiefs, pretty good quarterback. And then as for outlook, so they had a solid rebound in video ads in Q3 and they expect the year-over-year growth rate of video ads in Q4 to be similar. However, they remain cautious amid an uncertain macro environment and an uneven ad market recovery. Additionally, we will face difficult year-over-year growth rate comparisons in content distribution and M&E, which will challenge the year-over-year growth rate of platform revenue in Q4. That said, they have significant scale and engagement, and they expect to grow ad share. For Q4, they expect total net revenue of roughly $955 million, total gross profit of roughly $405 million, and adjusted EBITDA of $10 million. And as they indicated earlier, they remain committed to positive adjusted EBITDA for full year 2024, with continued improvements after that. And so if we look at the graph, we are now back over the 20 and the 50-day moving average, around $70 or so. It was previously a resistance point back in February and then back in June as well. Let's wait and see if we can maybe form a little base here, because otherwise, well, it will just be the same story yet again. Big jump on earnings report as we've seen previously, and then we go back down. So it's very, very important, especially on a technical basis, to form bases so that the stock has a strong base to build upon. So overall, pretty good quarter for Roku. Again, the turnaround story is going to take some time, but we're already seeing some clear indications into what direction this company is going in, and it's in a good one. By the way, this is the second quarter with the new CFO. Just keep that in mind. So that will be it for this video. Of course, do share your thoughts down in the comments below. Are you a buyer now? Do you still hold? What's your view on Roku currently? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.